two streams were horrible. Like the quality of the video was bad, and for one of them, the sound was even very, very, very bad. And this one, I really hope you all can hear me. So I'm just still trying to figure things out. So I talked about market structure yesterday. Today I'm going to talk about supply and demand. But like all of these things are just you know like you trade them together. Okay, so like they're the foundations on which you base your trading strategy, for you to be profitable. And what I'm going to do is I'm just going to be showing you. I actually have some recorded courses on my YouTube channel, and I'm also going to create more. I'm also going to record more videos to just walk you through these individual topics. Okay, but for now, what I'm trying to do is I'm just trying to analyze the market. There's some trades I took. I'll just analyze, how I took those trades. Should walk you guys through. I hope I hope you all follow through. And then um I'm also trying to get, on a live stream on TikTok. And the criteria is I have to have 1,000 followers on TikTok. And I currently have about 223, 224, thereabouts. So I'm going to leave a link to my TikTok. And for those of you who are more active on TikTok than on YouTube, I would love you to follow so you can help me bring the stream to TikTok as well. All right. So let me just share my screen now and we'll jump into it. This is boom. And what is that? Okay. So there's this pair I've been looking at, and so far it's NZDJPY, NZDUSD. Okay, let me check on this. So these are the trades I took, and I'm going to analyze. I'm going to show you, you know, what my process was like on these trades. I took them here, and let me see. So I talked about market structure before, right? I said market structure is the basis of, like, that's the foundation of the market. You can't do anything without understanding what's going on, and market structure provides you, with the information as to what the market is doing. And in the market, we're all trying to catch trends. So if it's trending upward, we want to be trading upwards. If it's trending downward, we want to be trading downward. Because obviously, if you do the opposite, you're going to be losing money. So for now, I'm actually doing a really, really terrible job, you know, pushing these streams because right now I'm streaming and I've not shared the link. So I think I should just do that now. Um, where's that? Where's that? Where's that? Let me just do that now. A minute. So, dashboard videos, right? Fuck. Live stream. Man, whoever said YouTube was easy. Oof, man. Okay, so I think I have. Okay, so this is it. I'm just gonna share the link. I like sharing, you know, on YouTube. So I'll just share it to my status first. Okay, and I'm just gonna say I'm live now. Link, next slide. I'm just gonna add this to text. Boom, boom, done. And I will also do. Okay, I think that's enough. Right, that's enough. I don't want to do too much. Okay, so back to the chart, right? Market structure, supply and demand was what I was supposed to talk about today, and I'm going to explain that with this chart. All right. So in the market, what happens is we think what pushes price is, people buying and people selling. Of course, that's what it all comes down to. But at the basis of all of this is supply and demand. And according to basic economics, when demand surpasses supply, the price is going to increase. And when supply surpasses demand, price is going to fall. So we know the market on the chart. What we see is market price action, within a specific period of time. So on the right hand side here, we see price. This all of this is price. You know, this is I made a video on currency pairs and what, because of course you can see up here you're seeing CHF which is the Swiss franc paired with the Japanese yen. And what this chart just tells you is the relationship between these two pairs and what price is telling you here. So if you for you to understand what this is, that if you don't know already, I'll just suggest you check out my um minimalist forex course playlist. It's a playlist on my channel, and just watch the currency pair video. I wish I could add a link to that on this. I think I will do that. I'll add a link to that on this stream. But for now, all you need to know is the currency pair on your right, which is the JPY, is the quote currency, and the CHF is your base currency. So you need um a unit. So for you to get a unit of this Swiss franc, you need to buy you need to pay, right now it's about 174.238 Japanese yen, right? So if I go on to the USD NGP NGN USD, is that right? It's supposed to be USD NGN. And this is the Nigerian naira against the US dollar, right? So what it says here is you need, for you to get a unit of the dollar, you need 1,597 naira. And that's basically the exchange rate. So that's what all this chart means. All right. So I'm just gonna explain supply and demand. Let me clear all of this. This chart is really messy right now. Let me use Euro USD, and I'm going to explain supply and demand here. So what basically happens is, because we know the market is actually moving due to its mass participation, mass behavior, right? So what every trader in the market is doing is what is being reflected on the market, reflected on the charts. And you see all of these things through what the candlesticks are printing. All right. I also have I really, really suggest you guys watch, the course for you to really understand all these things I'm saying. Okay. But for now, market structure is king. So initially you had high, low. This is the 4-hour chart. So all of these moves are pretty significant. You have higher low. So initially you're expecting price to go upward. Okay, but price did this and then it broke below. So we see that the trend has changed from bullish to bearish. And that's obvious from this point. Okay, from this point. The market broke structure here. So this is a break of structure. This line is not very straight, but you get the point. This is a break of structure. And what we're expecting price to do right now is to keep, printing, bearish structure until it gets to a point where it can now shift. But just based on that time frame, that's what we are seeing. But if you go to a higher time frame, you're seeing the market is bullish. Matter of fact, let me go all the way to the weekly. Let me go all the way to the weekly. So you see the market was, bearish all this time from here. It was bearish. It kept doing, where's my brush? The market kept doing, all right, it kept doing higher low, sorry, lower high, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower high, lower low, lower high, lower low. And all of this is what bearish structure until price broke here. Let me zoom in so y'all can see. Let me zoom in. So price broke this level, and that was when structure shifted from bearish to bullish. So at this point now we are not expecting higher highs and higher lows. All right. And when we actually the price broke structure here, but we had the sign here. Because if you look at this, you're seeing that the price came up, came down, went up, came down, and then changed character. And that's what I talked about in I think the first video of the first day. That was yesterday. The market broke this and then came down for a pullback, because whenever price breaks structure, it's always going to come down for a pullback before it eventually pushed. All right. But from this time frame, we can see something really unique here. Something really, really So this is our topic for today: supply and demand. So whenever price rises, price pushed off a certain. Let me mark this point so we can easily make reference to it. For price to increase, demand has to exceed supply. All right. So when we go down to the daily, all of this institutional volume that comes into the market, the so-called market movers, the big people who trade with really, really serious funds, those are the ones responsible for all these significant, pushes in the market. And right here, the market always gives us clues. So it's never like the market is you don't know what the market. If you don't know what the market is doing, obviously the market is giving you clues, but you're not able because you don't have the skills to see this clue and recognize them for what they are. All right, and then trade with them. So whenever you see a candle like this, I'm just gonna use this. Okay, a candle like this, and then the next candle pushes in with so much momentum, especially when it now eventually breaks structure. The candle before this previous candle, this candle here, is a demand zone. And what that means is that was where price was at before the big push happened. Okay, and that just means whenever price comes back to that point, it's going to go back up. Why? Because what made price shoot up this much was money. They injected a lot of funds into the chart at that point, and then it pushed price all the way up. And just because they have you know trades there, they wouldn't want price to come below. So whenever price comes down to that point, it's going to shoot up again. All right, so that's a demand zone. And if you look at this chart, you see it here. Let me just break this down. Okay, so the market did. Here's my brush. The market did this, came down, went up, formed a resistance, came down, found support, and broke structure. All right. So we're expecting price to pull back. Okay. But now, where's the market going to pull back to? We can see that along this structure, there are substructures, obviously. You have this high, this low, this high, this low. And then it was from this low that price shot all the way to the top. All right. So the momentum kicked in here. The momentum kicked in here. All right. So that's what we are expected to find our demand zone. So if you take your rectangle tool and draw it out, look for the candle with the momentum. This was the candle with the momentum. Actually, this was the first one. This was the first one, but it's already mitigated. If you draw the rectangle from the candle before the momentum candle, draw it outward. You see that price came back, tapped into it, and then went up. Same thing happened here. This is the candle before this candle. So price came to it. If you stretch it all the way out, right, price came down to it before pulling upward. And this is the daily time frame. So everything here is like, really, these candles are very, very condensed. They have a lot of information. So for you to capture, catch that move, right from where it's supposed to start or when it's going to start, you have to go down to lower time frames. I have all of this, explained in my correct Forex playlist course thing. So just go watch the video. That's the only way you can follow through on these live streams. And I'm just gonna show you. Just gonna show your okay. No. Okay, so I'm going to try to find my way back to that point in the market. I think that's really, really way back. That's terrible. Let me see. Anyways, I can't explain that because see how the market is really, really choppy. But I'm going to look for a similar example in the future, like in the present, to explain that. So if you break this down to the lower time frames, somewhere along here, you're going to see a small demand that price tapped into before it shut up. All right. So let me just come down to the present. You have market structure doing all of this. At this point, it's bullish. It's bullish all the way from here. High, high, higher, low, higher, high, higher, low. But then if you look at this point, you're going to find that the market broke structure again. High, low, higher, high, higher, low. It's tried to create a new lower high. Sorry, lower lows, lower highs, because it's a bearish structure. It tried to create a new lower high for it to come down, but it failed to do that, right? Because this high was weak and it created a strong low. The strong low now broke above. Okay, so we know market structure changed character here. It changed character here, but it never truly broke structure until this point because this was the most recent high before this low, right? So when it broke structure, we're expecting what? A pullback. Where do we find it? Where are we expecting the pullback to begin? The demand zone, which is the candle before the first momentum candle. This was the first momentum candle. Let me zoom in. All right. This was the first momentum candle. Okay. Why can't I even find? Okay. This was the first momentum candle here. This one. You can see the way it's opened and then just shot all the way to the top. So we'll find our demand zone at the candle before the momentum candle. So when price pulled back into demand. Let me just change this to demand. Okay. Price pulled back into demand before going up. Sorry about that. Before going up again, right? So you always find demand zones you know, in the market. And then from this point, price now went on to break the structure because, of course, it has to do that because it's now a bullish market. So it has to keep breaking structure. But now when you look to the right, you see that in as much as the base of this bullish structure is at this point, the market never broke structure until it formed this low. So from this low, it broke out. Okay. So if you analyze this, you're going to find your demand somewhere around here. All right. And I can already see where demand is. Okay. You can already see where demand is. But this is too blocky. This is the daily time frame. I'm just going to go down to lower time frames. H4 first. Okay. See how choppy it is. See how chalky it is. All of this might seem so complicated for the beginners right now, but if you're an absolute beginner, I would suggest you watch my Forex course. It's going to explain everything for you, and then you can come on here and ask questions. All right, I'll actually be reading the comments and addressing these questions in the next videos, upcoming videos. So we had the market do this. From this demand, the market did this, but before it went, so you see this point where the market came down to. It created this high, created this low, and broke this high here, right? So the point where the market went, from the point where the market broke this structure, you're still going to find the demand. You're always going to find demand and supply in the market. See the candle before the momentum candle. Price came on. So if you miss this trade or you actually took this trade, you might want to even scale in here, taking another trade here. So these are all trade opportunities. Just look for the points where the market found its lowest point before it broke the structure. There's a demand zone there, right? So this was the new demand. And then from this point, the market now went on to break what? It created this high, which was this is a change of character. I don't even, okay, let me just start this. Change of character. The low before price broke this point where cracked market started switching was this point, right? And the market came down. But it's not all the time the market will always come down to demand. Sometimes it just has to come down to a discount zone. All right. So a discount zone is basically half off. What's this? A discount zone is basically halfway through the entire swing. And I'm going to explain what that means here. So the market did this, did this. This was a high, this was the low. If you measure out the high to the low on your, what's it called? Your Fibonacci retracement tool, you know, you're going to find discount zones there. Discount zone is just the bottom half of the zone. Let me take out this so it's clear. Price is always going to find its way back to this point. So ideally, we would have said this was our demand and would have been expecting price to come down here. And we are actually going to miss that trade because price never did. And even on this swing, the discount zone, price didn't come into the discount zone. Okay, but we can actually find demand here. I'll show you. I'm actually seeing one demand here. There's a demand zone here. From this high, the high of this candle to the low of this candle. And this is what we call flip zones. I'm going to talk about that in a minute. A flip zone is basically a point in the market where the market does this. Okay. So when you draw out this was the point where the price flipped, where sorry, structure flipped from bearish to bullish. So if you take the high of this point that price broke to the low, that's a flip zone. And then on the market, on the chart, you see them like this. You see candles that are like this. See the first candle. Okay, let me just duplicate this. You see a bearish candle like this. This is bearish. Okay, this is bearish. So price came down from here, came down here before eventually going up. All right, that is a flip zone. It's the same thing. Whenever we see bullish engulfing candles or bearish engulfing candles, there are flip zones embedded because that's where price flips. Initially, it was coming down and then it flipped. So that is a region because if you go down to lower time frames, you're going to see something like this. You're going to see a point where price was initially going down and then it changed direction. That's a flip zone. So that's the same thing that is happening in this candle. I'm just going to explain. Let me highlight this candle and show you what it is. A lower time frame. Sorry. Okay. It's my eraser. Let me just clear the charts. It's not working. So I'll clear this and clear this. I'm just going to go down to lower time frames because I want to show you why I'm saying there's a demand here. Go down to 1 hour. Zoom out. I think I'm beginning to see some candles. Go, bruh. Okay, that's it here. Let me zoom in. That's the zone. All right. So as you can see, all of this is just really, really subjective. It depends on you. Price made a high, made a low, made a high. Overall, this was like the high. It made another low, made a high, made a low. Momentum kicked in with this candle, pushed up. Okay. So if you now take your rectangle tool, let me take out this. If you take a rectangle tool and draw it out from this candle, the top of this candle to this, you see that's a demand zone. So that's what price does. That's what price does. It always seeks demand. And if you're looking at it from the higher time frame, that's why we always say you should combine time frames to get context as to what price is doing. Because if you say some people say I trade just the H4, some people say I trade just the daily, some people say I trade just M30, and that's basically you saying you don't know what you're doing. All right, because these time frames are meant to give you context, not even. And most people say this thing just because of ego. They just want to take pride in the fact that oh, they're specialized, they have a specific time frame they trade, and they know how to. If it works for you, fine, but you need all the time frames. You need to correlate your time frames for you to understand what's going on in the market. Okay. So this was the demand price sort before it went up. So obviously, since price broke the structure here, since price broke this structure, come in, let me see something. Just going to open this. I can't even find join the panel show list, blah 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 blah. I can't even find what's it called? Oh, okay. So that's not helping. But I was actually looking for um what was I looking for again? Okay, I was trying to say I was trying to explain what this, what supply and demand looks like. Yeah, sometimes they are hidden. So that's why you have to like go down to lower time frames and then just use your head. Once again, I can also see another flip zone here. You see where this candle, so overall we know price is going to break the structure from this point, right? We're expecting price to break the structure from here. Okay. But see what price did on this time frame H1. Price went up. Let me get to my brush tool. Price went up from this demand, got to this high, came down to this low before going up. See, when you're correlating candle, when you correlate time frames as well as you also correlate candlesticks. So you see this high here before price didn't just shoot up from this high to this point. It still came down. You can already see what the candles are, what they look like. So this is also a flip zone. This is a demand zone. This is a demand zone. Okay, price came down into it. So if you're going to break this down, let's isolate. Let's refine it as though we're actually trading at this point, and then we are trying to catch the move. So this is it here. This thicker one here. All right. So you can see. Let's refine it. You see, price tapped into it neatly and then shot up. It's the first time it tapped into it was here. Okay. So if you take this trade here, you're actually still going to get profits because whenever you're buying, whenever you're buying from a point, stop loss below this demand zone, the bottom of this demand zone, because this bottom of this demand zone is the low, the previous low. So if you're buying from this point, you target the new high. This is two to one is to 2.5 risk to reward. So that's so if this basically just means if you're risking $50, you're actually going to make 2.4 times the amount. So it's a good bargain to an extent. Although I don't trade 2 to 4s, I don't trade 2.4 risk to reward ratio. I actually do 3 and above. All right. So if you targeted this high, you're actually going to win this trade, right? Because price took it out. Price took out this point here. So all you're doing is you're just tracking market structure, reading the candlesticks, looking for supply and demand zones. I'm also going to talk about liquidity concepts and how it can be tricky. They're just like, these are what happened. This is what happens behind the scene that most traders don't see, and that's why we make losses. Even me sometimes. Okay, and that was what actually happened here. Because this was a low. Ideally, price is not supposed to come below this low, but price came, took out this low, and that's liquidity. That's basic liquidity, right? Because I'm going to explain that. I talked about it in my Forex course, so you can just do well to check it out and understand what the concept is all about. All right. So price also created another demand here because price has broken this structure. It has to pull back. And where is it going to pull back to? Demand. This is demand, basically. So maybe we would have taken this trade from the stop. And if your stop loss was really tight, it would have been at the bottom of this previous low. And then you would have lost that trade because obviously you're targeting this new high. Okay, but because you're in a bullish trend, price is always going to break above. But this is the safest point to target. Always target the recent highs that price created, right? You would have lost this trade unless maybe you shifted your stop loss a little bit below. But understanding liquidity concepts, you wouldn't have even taken this trade at this point. What you would have done was taking the trade at the bottom of this previous week. Stop loss below this point, targeting the new high. And you would have, just activated and gone into profit instantly. So I'll actually be creating um I, I think I'll create a separate community where I would take on like 20 people who are interested, 20 of them, to just teach them, specifically walk them through the whole process. And this might not happen within the next 3 months, but I'm actually going to do that. So when price went up like this, you see how price just kept going up. So these are trades you would have been winning, as price was going up. Now from here, price shot up like this. And then eventually price came down to find momentum. Let me zoom that in to explain how we would have caught that move. Network. Okay. How would have caught this move here, right here. It's far back, so we can't really do much. Okay. But by looking at the candles alone, would have been able to find there's also a demand here. From the bottom of this week to the base of this week, there's demand there. If you go down to lower time frames, it will be more refined. But just because we're already, way into the future, if I go down smaller time frames, it's going to be difficult navigating back to this point. But let me see what I can do. Let me go to M15 and zoom out as much as possible. Let me try to locate that point. I can't go beyond this. Let me see M30. I think I should be able to find it here. All right. So if we go down to M30, it's the same thing. It's the same thing. It still looks the same as the M1. This is the demand zone, and price went up from here. So I'm just going to skip to where we are currently in price, and I'm going to make an analysis based on where we are. So you see what this looks like in real time. Okay. It's crazy how this stretched to the future. It's crazy. So what I was even trying to explain before was price created this high from this point, created this high. Okay. And because on the daily, let me look for that. Okay. So this was where we were. On the daily time frame, this was the price had broken this structure here. Price had broken this high. So we now know we are in a bullish market, right? And then price came back down to seek support to go up. But price never went up until it took out this high here. At what point did price take out the high? It took it out here. All right. So when price did that, it left a demand zone here. The candle before the momentum push, the momentum candle. That's this point. This was where price shot up from. So we're expecting price to come back down here at some point. Whenever it does, we're expecting price to shoot up. Okay. But for now, this is the daily chart, and this might take months before price comes down to this point. And all we want to do is expect that price is going to be making higher highs and higher lows, of which it did here. It created a higher high, created a higher low, created a higher high, higher low, higher high, higher low, higher high, before it eventually broke. Okay. On the daily, it eventually broke here. It actually changed character here, but this was the structure it broke. So we're expecting price to now pull back to an extent before coming down. All right. And this is also a potential target, but it's a really long-term target if price is actually going to come down here. So let's go down to the H4 and see what we can do today. You know. So yeah, it is. Supply and demand is key. It's key. Always look for map out your supply and demand zones before you start analyzing. So let's analyze what happened here. Price broke this. It's actually a really, really simple thing to do. Price came down, bearish, bearish trend, and then it failed. First of all, it failed twice. The first time price failed to break this low was from this high. It failed to break this low from this high. So initially it was supposed to come, ideally it's supposed to come down like this, but it didn't. It came down, found a support, and went up. So what this just meant was that this low was strong. It was strong because it prevented price from coming below, and this high was weak because it was unable to push price below this low. So this became a strong low, right? And then price later went up to form another high, eventually came down, took liquidity before breaking these two highs, right? So this is now our strong low, and this is now our new high, and that makes this a break of structure right here. This is a break of structure. So when price broke structure, it's going to what? Pull back into what? Demand. The candle before the momentum kicked in, which was this. Okay, it's the demand zone. So what we're expecting price to do is obviously bounce off this demand. So price bounced off this demand zone. But now when price bounced off this demand zone, it also created another demand here. So you just have to keep following the story. This is what the demand zone looks like. But I'm just going to keep it here so we're not too tight. But this is H4 and I'm actually going to leave it here. I'll leave it here. Draw out. So this is what we're expecting price. So whenever price comes down to this point, you're expecting that it's going to bounce off. Okay. And it actually never did. It still hasn't. So this might be a very, very likely target for price to come into. Very, very likely. In the meantime, let's track what what price has been doing. We have a low here. The price broke. So we're expecting a pullback, right? We're expecting a pullback into this structure. Price did this, broke. Okay, did this first, then broke. Okay, and then we know that this was the area price was. This was where price took momentum to come down. All right. So we're expecting the reaction. We're expecting price to go all the way up to maybe to that area, take it out before coming down. But we know that we're still in a bullish market. We're in a bullish market overall. You see higher, high, higher, low, higher, high, higher, low. So this is all just pullbacks. And for us to know when the pullback has ended, price has to change character. Price has to do something like this. It has to do something like this. Okay. Break it before going up. Right? So for now, price is close to this demand. So we're just expecting price to come down to this demand before it changes character and eventually goes up. All right. So how are we going to capitalize on that information to catch the move we're expecting? What we'll do is hold on. 10:06. Hold on. Let me quickly do this. I heard that girl was a gold digger. He came be through if she did you. I'm just trying to find. Share this. Copy link. Come here. This. Boom. All right. Okay. So we have to just look to the previous. Oh shit. Previous areas. I'm trying to find somewhere. I've been talking about demand all this while, but it's the same thing for supply. Supply is the point at while demand is at the bottom, supply is at the top because price has to tap into supply for price to fall. And that's because we said the higher the supply, if supply exceeds demand, price is going to fall. Okay. So at this point, because we are looking at what the market is doing, let's go to the daily and see what the daily chart looks like. Yeah. See here. Price did this, did this, did this, went up, created supply here. The bottom of this candle to the top of this other candle. Let me zoom in. Let me zoom out like this. Okay. The bottom of this candle to the top of this candle. You see how price tapped into it before falling. In the same vein, this supply has been mitigated. So it's now weak. It's no longer a strong supply zone. If you go down to the H4, it should be clearer. It should be clearer here. All right. Oh, it's even worse. It's choppy. But that point has been mitigated. So the next supply zone is here. Candle before the momentum. This was the momentum candle. So I'm going to use this to this. So expecting price to come up here. Okay. So once price comes up to this point, I'm going to take a sell. So for now, I'm just going to place. Oops. I'm just going to place a pending order with my This is a demo account. All right, so we'll not. Why is this thing different? Let me move this. Okay, so I'm just going to click on trade pending order, which is a limit order, by the way. I'm gonna move this to this point. Stop loss above. Take profit at this target. So you see what I'm doing? I'm trading between supply and demand. I'm trading from supply down to demand. All right. And I'm going to make this a sell limit. I'll be risking this is 1 to 6. With these lots, I'll be risking $1,056. And if it goes into profit, I'm going to be getting 6,882. So it's 6 times what I'm risking. All right. So I'm just going to place this order. I mostly use limit orders because I'm not going to be on the chart every time. And then once price comes down to this demand, what is going to happen? It's going to go up. If this demand holds, it's actually going to go up from this point. So I'm also going to take another limit order here. So this is going to be a buy limit. And I'm going to put it here. So the moment you're taking profit on the other trade, will be executing another trade, executing the buy trade. And my TP is just going to go higher. I'm going to target this previous high. Right? And I'll be risking 1,132 to get 11,374. Let me see how many pips this is. How do I even find out? Anyways, I'm just going to take the buy. Right. So these are the moves I'm expecting the market to make on EU. And that's just because I'm moving between supply and demand. I'm also going to let me go down to the 1 minute to see what I can quickly explain. Because 1 minute is going to play out faster. So let's look at this for instance. Price kept making lower lows and lower highs. Right? Lower lows, lower highs, lower highs until it changed character here. Change character here by breaking this point. And then it pulled back, and to tell you this was actually on point, it never broke this low. Why didn't it break this low? Liquidity. There was a liquidity pool existing here at the bottom of these lows, and price took it out. Just watch the video on the Forex course. Price took out this level. So there was no need for it to breach this other low. So it just went up. So let's keep tracking. Price has pushed up from here with this much momentum. After it broke this high, because whenever price breaks a high, it's going to pull back. Broke this high, and then it created this demand. It left this demand. There's a demand around here. I would have used this one, but this one has been mitigated with all these risks. So I'm going to use this one before the momentum candle actually kicked in. So price is going to come down to this point. This is where price is going to come down to before it pushes up. So as you can see, that's why it's forming the bearish structure. But now let's track this retracement where it started. It started when price broke this high. So when price broke this low. Because it created high, low, and then boom, it went up like this. But it didn't break until it came down to this point. So this was the move that broke structure here. Right? So we have a demand, so we have a supply zone existing around here. We have two zones actually. We have this one, and then we have this one. But I think this is the one price is respecting because let's look at this. Let's look at this. Boom. Boom. This was the move price broke structure with. Started from here. You can see the flip candle. It's where the candles flipped from bullish to bearish, right? So price just came, tapped into it, and then it's dropping. So you could easily take a trade from here, sell all the way to this point. But if this fails, price is going to come up here. Let me even refine this some more. Price is going to come up here and trade down. But I'm just going to leave this, so watch it play out in real time. I have just 9 more minutes. I don't know if it's going to work out, but I'm going to show you what the trade, the outcome of this trade in the evening when I do the stream in the evening. So we can take a trade. I don't want to take this trade because it's already, my risk reward is not so good. Imagine I'm taking a trade from here, stop loss above. It's barely 2. So I'm actually not. But if price should come all the way to the top, it's still not worth it. Okay, it's close. It's actually cool. It's cool. I think I'll just place a pending order here if it gets triggered. Sell, of which I doubt. I doubt it's going to get triggered anymore because price has already dropped. So I'm going to put it here. Put my TP here. Stop loss here. All right, and I'm gonna. How much am I risking? $50. Let me increase that to about how much? Oops, 500. That's not worth my time. It's not worth it. I'm not going to take this trade because the risk to reward is just poor. All right. But let's just watch that play out. Let's watch that play out. Um, oh, it's actually going up there. Wow, I think I should take this trade. I just want you guys to see what it looks like. You know, watching me take a trade actively. It has been triggered, right? But now I have some considerations because price is failing to create a new low. Ideally, from this point, it's supposed to come down, create a new low, right? But it failed to create a new low because of this level. See this level here? It would have at least broken this level, but it didn't. So this trade might not even go as might not get all the way to take profit. But let's still watch. Because what price was supposed to do, what price usually does is from this point, it comes down, goes up, breaks the previous low, goes up, and then comes down like this. But in this case, this low is just seeming this okay. In this case, price did this, boom, and then it has not broken this low yet, which is like a really minor low. We're already in profit, 1.2 pips in profit, and then it came up. So it's just choppy. I'm not very confident on this trade until price breaks this low. Until price breaks this low, I this high might still fail. So let's just watch it go. Let me see what it looks like. This is the trade. EU short to 40 $340 in profit. Mm, so far. All right. So price is pushing. We're halfway through the trade. I just want you guys to see. So this is for $60. It's not bad for a quick trade. Okay. So if you're someone who like you're busy, now you see what price has done. Price still hasn't taken out this low, but price has created another supply. So there's also an opportunity here. I'm just going to show you what I mean. Like these are not trades I would take on a normal day, but I'm just going to I'm trying to explain a point, right? Because wow, it's already there. I was going to take a limit order here. Ouch. What's going on? Boom. I'll just take a market execution sell. Hope that gets rejected. I think the price was too much. I'm just gonna how do I even adjust this? Um okay, so we are losing the trade. Okay, it's gone. That's what I was saying. Price had not taken this low. I would have not I'm not like confident because price never took out this low. All right. The trade is gone. Once the price took out this low, that's when I would have had confidence. Now my next trade is going to be here. And I'm going to take it here. Stop loss at the top. This is 1 minute. So like the 1 minute, a lot of things has to be overlooked. A lot of things has to be overlooked. Not overlooked, but you can't really rely on the information you're getting from these candles. Okay. So if you're talking about flip zones, talking about discount prices, if you take this to this point, And what I'm measuring is from this high to this high. Price has to come into the 50. This is the 50% mark. Price has to come into it for it to be a discount price. They can't, if they sell at this point, it's still premium. They have to sell from the discount. Okay. So a good trade, a typical trade is supposed to look like this. Like this. All right. But this is not, this risk to reward is not good. It's not good enough for me. So I'm not even going to take this one. Because if I'm risking $1, I'm only going to be getting $1.6, and that's poor. I would love to take something like this, which is 1:9. So if I'm risking $1, I'm getting almost $10. This is what a good trade for me is going to look like. So I'm not even going to take this. I'm going to place my limit order here instead. All right, and place it. If it comes up, it comes up. If it doesn't, it doesn't. We have just 2 more minutes, but I'm just going to wait until this plays out. All right. But for some reason though, this has tapped into liquidity because it has cleared out all these highs. There's a liquidity pool above here, but I'm trying to just explain from the context of supply and demand. Okay. Let me see. I have a message. Where is that? It's crazy. Okay, so it tapped liquidity and then it's dropping. But let's still see. What I'm actually concerned about is this point and this point. Okay. So consider liquidity to be fuel stations where price has to stop by to get fuel to move. All right. It's it needs enough gas to move. Okay, and liquidity pools are areas where you're forced. So let me explain it this way while we're waiting for price to do what it does. And this will be my closing remark for this video. Let's say you have some levels in the market here. No, let me do this. You have this level. 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 And all of these levels are levels in price. Okay. Right. And then you're currently, so now price has broken the low. But let's wait for the candle to close. If it closes below, then we know it has, we have all these levels. And all of these levels have money. So let's say this is 20. Let me reduce this to 14. Okay. This is 20. This is 20. This is 20. This is 20. 20. 20. And then you're currently, some levels don't even have anything. Some levels don't have money. So I'm just going to put an example of the kind of level here. I'm going to move this up and replace this with this. Let's go this. Just going to put this here. Okay, and this level is 0. It has nothing. Let me change the lines to dotted lines to buttress my point. It has nothing. It's an empty, like it's a level without money. And then you're currently here. This is where you are. Not us, but like the hypothetical person we're talking about. This is where the person is. This is gonna be a blue line. Let me increase it. Okay, just catch my drift. This is where you are, and you want to take a sell position from this point to this point, and your position is in volume. Your position is going to be $60, in volume, right? If you take this sell here, and basically what a sell position is you buying from someone. So you see price is coming. Let me confirm. I have the pending order here anyways. So what a sell position is when you place a sell, you're selling to someone who is buying. All right. So you need to find, if you're selling $60, you need to find someone who is willing to buy $60 from you at that price. Okay. So what now happens is, if I sell here, there's no money here. At this level, I don't have up to $60. So for me to be able to find people to buy from me, I have to move all the way to the top until I have $60. Like there are 20 people, $20 here, waiting to be sold. So if I take my position from here, it won't fill my orders. Okay. I'll just be $20 here. I'll still have to move all the way to the top to get $60, which is 20, 20, 20, 60 before I can, you know, sell without making losses. If I sell from here, my trade is going to it's not going to get executed. It's not going to the broker is not going to register that as a trade. All right. Now let me just come back to this. The market has broken this structure. So, but it has not tapped into this demand, right? So price might just come up. There's a chance price might come up to this point before dropping. So another trade would look like this. So this is what you just keep doing. That trade might look like this. Hypothetically, theoretically, because this is not practical. In real life, I'm not going. Wow, I just might. It's 3.2, but it's 1 minute. It's just too choppy for me to trade. Okay, it's just too choppy for me to trade. And but this is actually a good trade because you see this high. It's a false high. Not like a false high, but this is what I'm saying. For them to push price down, they need to fill their orders and they have to fill. So let me just explain this point before I come back to explain what's going to happen here. Price has to take out this high, tap into this supply before dropping to this demand. All right. So the people who are trading with really, really serious funds, they trade with a lot of money. So they need you to, if they're selling at this point, they need you to buy what they're selling at the price they're selling it at. Okay. So selling at this point means that order is not going to get executed. So for them to get executed, they have to take all the money in these levels above for them to sell. Right. So what they do is they um they trick you into buying. It's not even trickery, it's actually forced buying. They force you into buying. And what that means is stop loss, stop loss orders. So let's say someone took a trade here. Okay, targeting this point. I'm just going to layer all these trades on each other. Someone took another trade here. All right. Another person took another trade here. Okay. So you can see it has tapped in. And then let's see what price does to maintain the overall structure. If it's going to. So all of these trades, right? They have stop losses. This trade is going to get cancelled. This trade is worth $20. This one is worth $20. This one is worth $20. And let me even bring this down. Okay. They all have their stop losses above. And for every sell order, your stop loss basically means buy. So when your stop loss gets triggered on a sell order, you're forced to now buy. Initially, you want to sell, but you're forced to now buy, from the market at that point. And you're actually going to be losing because you don't want to be buying at the highs. You want to be buying at the lows. All of this is going to make sense when you watch my video. Okay. So this infinite man, composite man, which is the hypothetical collective of, all the institutions and hedge funds that are trading the market. These are the people that haunt your stop loss, as they say. They have to drive price all the way up to take out this money, take out this money, and take out this money to fill their orders before price comes down. That's why sometimes they tell you, you see why things like this happen. So they tell you it's a bearish market, or we tell you it's a bearish market, and price is not going to violate this high, but price does this, right? So why is this happening? If your stop loss is above this point, why are you losing this trade? And that is actually liquidity, because they need to take all the money on top here. Because most people around the world, you're not the only one taking trades and putting your stop loss above here. A lot of people are putting their stop losses above here, and they need all that money to fill in their sell trades. So they will just close out at this point. Like force all of you to leave the market and sell all those positions to them. That's what gives them, the drive to come down to this point. So that's what just happened here. All right, that's what happened here. And because price had tapped into liquidity, there was no need coming all the way to the top because it's already close to this demand. So it has to just take out this demand and then push all the way to the top. Okay, so this was actually a very good trade, an example of what I just explained. All right, so our video is already. Let's see if this is going to play out in the next 5 minutes. If it doesn't, I'm just going to close, and see you guys tomorrow. These are trades I took initially on other currency pairs. So I think I lost about $500 on this trade. Account history. Let me see. 520. These are losses I made after these were pending orders I just placed and I didn't even check. I just left them and just anyways. So 520 on this trade. 520 was lost. Let me see. Let's just watch this play out. In the next 4 minutes, if it's not done, I'm just going to go off because I don't want this stream to be way longer than 1 hour. Okay. I think I'll just close this out. And by evening, I'm going to drop. So there's a WhatsApp channel. Okay, there's a WhatsApp channel that I created to drop updates. And I'm just going to copy this. Sorry, screenshot this and paste it there. So for when it executes, I'm going to drop it there. All right. So for now, I'm going to leave a link to this WhatsApp channel here. If you've not joined, just join. That's where you see when I'm coming on. You see updates as well as, whatever I'm going to be posting. And I'm actually just going to move the people from that WhatsApp channel to this exclusive group I'm talking about. So if you're interested, just join. All right. This should be it. All right. This is the trade. So when it completes, I'm going to show you what it looks like here. If it completes, like if it hits take profit. Okay. So I'll be going out now and I'll see you guys in the evening by 10. All right. So peace out and bye for now. Stay safe, guys.